Welcome back. It's time now to take a look at the top business stories. Banks to treat loans as total loss after 6 months of non-payment. Dubai Group misses payments on 2 separate loans. And we find out how the region is addressing money laundering concerns. There were mixed results across the GCC markets today. The UAE bourses opened the trading week lower as international markets closed lower on Friday over debt repayment concerns in some European countries. The DFM fell over 0.75% to close at 1,687 points. Shares at DP World were down 2.5%. Arab Tech fell over 1.5%, while MR Properties dropped almost 1%. Dubai Islamic Bank was up nearly 2% and Air Arabia gained marginally. 73 million shares were traded, valued at 105 million dirhams. In the capital, the ADX was down 0.5% to close at 2,748 points. Aldar Properties gained 2.75%, while the Abu Dhabi Commercial Bank was up 0.5%. Shares at TAQA fell 5.5%, while Etisalat dropped 0.5%. 44 million shares were traded, valued at 92 million dirhams. The country's banks have been mandated to treat personal loans, auto loans and credit card loans as total loss if the instalment is in arrears for 180 days or more. In a notice published on its website, the UAE Central Bank asked lenders to book provisions every 3 months instead of year-end to cover bad loans. Banks will have to make provision of 25% of total loan balance, where instalments are due for 90 or more days, but less than 120 days, and 50% provisioning if instalments are due for 120 or more days, but less than 180 days. The new classification aims to depict a realistic financial position of banks and other financial institutions and is in line with the Basel Committee on Banking Supervision standard. Dubai Group has reportedly missed payments on 2 loans worth over $1.5 billion. Reuters reports that the arm of Dubai holding conglomerate missed an interest payment on a $330 million loan from Citibank, set up to purchase a stake in Bank Islam Malaysia, as well as a profit payment on a $1.5 billion Meher Bahar payment involving 24 other banks. While experts believe that this isn't surprising, they also feel the impact of this lapse would not be as severe as what the economy witnessed last year.
It's not really a surprise that we're facing this situation, to be perfectly honest. Yes, there's been a spike in the credit default swap rates. That's kind of inevitable whenever there is any kind of hiccup in debt repayments. But as I say, it's not really a surprise this is happening because we've known for some time that, quite frankly, Dubai is a bit overstretched. It's quite likely that what we'll see again is further negotiation and haircuts for the banks. It is possible, but to be perfectly honest, perhaps not entirely likely that these payments will be made within the grace period that is allowed for them. One of the problems we face yet again, and here I am doing it, speculating, is that rumour and speculation is rife. The problem that does need to be addressed still is the issue of transparency of dealings, and I think it's actually hurting Dubai Group for them not to be as open perhaps as some of us would wish them to be, because that's what's pushing the CDS rates up.
Now, the UAE's non-oil foreign trade reached 477.6 billion dirhams in the first 8 months of 2010, an increase of 9.45% compared to the same period last year. Norway, India and Switzerland topped the list of countries importing from the UAE in the non-oil sector. Similarly, re-exports grew at 17% during the same period, from 96.4 billion dirhams to 112.5 billion dirhams, with India, China and the US topping the list of countries exporting to the UAE. The GCC markets had a mixed run today. Let's check in on those numbers now, starting off with the UAE general indexes. Coming up now, let's take a look at the major international currencies against the dirham, followed by the price of oil and the precious metals. On the way after the break, we talked to Andrew North, the Managing Director of business consultancy and internal audit company Protivity Middle East, about the fight against money laundering.